Good morning, Paul Georgie from Allendale. It's November 5th, Monday morning, and we're at the beginning of a week that has a lot of reports that likely will set the tone for the grain markets for a period of time. First of all, this afternoon we've got the crop conditions report. That is going to be monitoring the wheat as much as anything, as we started out at an extremely low level, only 40% good to excellent last week. Then we've got the elections tomorrow, and trade's going to see some evening up, I think, of positions and the nervousness that might occur ahead of that election. We'll see some of that also this week. And then the export report on Thursday, and then we have the supply-demand crop production report on Friday. And that's already taken some precedence, I think, this morning when you see soybeans lower, corn, wheat a little higher. And the attitude there is that we will see an increase in soybean yield, as we should see with the later rains. The attitude and some of the estimates are for another possible 2 to 3 bushel that could be added on. So numbers there kind of keeping some pressure on the soybean market here in the near term. In the corn going into Friday, the feeling there is that we should see some reduction in yield. Historically, when you see a lower October number, the November number continues to show a decline in yield. So that's kind of looking ahead into the week. Some of the things that's happened here overnight, we've got some economic data out of China, the PMI at 55.5 from the government, compared to a 54 or 53.5 estimate. That sounds all good, but what's going on in China right now is the government is preparing itself and having meetings to change leadership, something they do about once every 10 years. And the concern now is that the stimulus will not take effect immediately. That's causing some pressure on the stock markets in Asia, and putting some pressure on the grain markets as well. So that could be some reason for some of the weakness in soybeans. We're going to be looking at exports all this week, waiting for some more export announcements here in the morning at 8 o'clock. However, corn, we're still above the world price and competitors' price of corn, so we don't expect to see too much demand there. But without China, and if China backs away from the market at all, we probably won't see many soybean exports either. So those are announcements that we're going to be watching. And then Thursday we get the weekly number that will be importantly watched. Other news, we got the CFTC announced their commitment to traders on Friday afternoon, showed that the funds reduced long positions again in the 5 major ag commodities. Corn was hardest hit with the largest out of a 50,000 contract reduction. Still carrying a lot of open interest in corn, however, on the long side, over 236,000 contracts there. So those are important numbers to watch as we move forward here toward the end of the year. So we expect some choppiness this week, and then times of quiet where traders will be satisfied, especially going into tomorrow's election. I think if we see some early adjusting here, we could see some quiet trade into that period of time. In the livestock trade, cutout values on Friday were down 76 in choice and 76 in select in the beef. Pork cutouts were down only a dime. Cash markets this morning in the cash hogs are steady to 50 lower. Some key numbers in the livestock to watch are last week's lows in the pork complex, especially. If we take those out, we may get some more selling pressure. Seasonally, we should see a trend for lower prices as we move into the December time frame. So watch that. Keep in touch with Allendale Advisory Report. We'll be happy to answer any questions that you might have. And you can reach us at 800-262-7538. We wish everybody a very successful trading day. Don't forget to vote tomorrow, and we'll talk to you tomorrow morning.